Hope you're having a happy weekend. This is Money Duck, and we're going to go over some weekend analysis as we start to look for trades through the beginning of the week and kind of plan our movements as they happen. So, what I like to do is typically we're going out to a 4 hour, 1 hour, and 15-minute chart for our analysis on the instrument. And then we'll go down to a 3 or 5 minute to take our trade entries as well as modify our stops along the way. We use that 3 or 5 minute time frame for our day trading. So what I like to do on the weekend is come out to the charting and remove absolutely everything off my chart. You can do that in TradingView by clicking here on the wastebasket, and you'll see mine says remove 0 drawings. I don't have any to remove, but I like to click that button, take everything off the charts, so I can go in and look at the charts with fresh eyes, um, and basically blank out everything we did during the week. I want to look at the movements of the 4 hour time frame. So again, what we like to do is trade with the larger time frame momentum or movements or setups. But however, we're down on that 3 or 5 minute time frame to take our entries as well as to pull profit, and then we'll leave runners on. So what we do is get in on a 3 or 5 minute, and then once we're in profit, we'll pull part of our contracts off and leave runners on, move your stop to break even, and then adjust your stop as it moves. So what I want to do is I'll come in and pull in as much data as I can on the screen. And then what I like to do, because we do trend lines, and then we'll do a zone above where price is and a zone below where price is. So we know where price is right now. Okay. And what we know is that come the beginning of the week, when the market opens, things are going to move one way or another. They might move sideways for a while, but eventually it's going to break out and go long or short. Well, then we want to capture on those moves. So what I'd like to do is have a target above where price is right now, and then a target below where price is right now. And that's what we're going to trade to as we're in. And then if we're looking for bounces off those zones, and then if they break through the zone, well, then we know we might have that breakout trade for a longer term hold on our runners. So we look for if it's going long, we're wanting it to make higher highs, higher lows on the smaller time frame. And if that pushes it through a zone, we stay in with our runner. We don't get out till we get a lower high, lower low, and that's where we would exit the entire trade and look for a reversal. This video will be under 20 minutes. So it'll basically, I got a 20-minute max is what I do on the recording. So what I like to do though is I can see a low here and a low here. So I can see 2 points where if I draw a trend line across those, I could see we're way up above that. So that trend line does not come into play. So what I'm going to do is I'll draw it on here anyways, pick that point, this point. The tools don't always get them right to the point. So what I like to do is kind of zoom in and just make sure that this is to the bottom of that swing. Okay. And then we'll pull back. We'll go over here to this one and kind of zoom out, and we'll see that I need to move it down to the bottom point. Again, we're not even close to that. We're way up above that on gold. Okay, so that's not going to come into play. Now I could see we have that touch point, okay, and then we have a low here. So I could see that if we draw a line there, that's closer to where we are. So let's do that. We'll grab the line here, and I need to color these green. We'll hit it there. And if you come in, I've already got templates drawn for uptrend, downtrend. We'll change that to an uptrend. We'll also take this one and come down to an uptrend template. Okay, so now they're labeled. Now, again, I need to kind of zoom out and just make sure that this start of this trend line is at the bottom of that candle, which it is. And then I'll kind of zoom over here and do the same thing, which it's not. So I need to move that just below that to that point. And if you have to, kind of zoom in because they're kind of sensitive, I guess you want to say. Now I'm on that bottom of that swing. So let's zoom back out. So I can see that that is closer to where we're at. If you want to draw a more inner one, you could go from here and draw it to that point if you want. So let's do that. And we basically draw from this point to this point. And I could see we kind of breached that for a minute. So we'll kind of look at that. So I know I'm not on the low. Let's get it to the low. And if you want, you can come in. If you got your template set up, and just label that. And then I know we need to come over here and I need to move it. Originally, I would have had it here. Okay. Now we kind of breached that on this last downward push. Okay. So we would have had the trend line here. And I see, okay, well, it breached that briefly. So what I'm going to do, but now we're back up above that. Okay. So once it hit this area, it popped back above. We're still above it. So what we want to do is let's move that over here to this low. And again, we'll zoom back in and just make sure we get it down on those wicks because we are on a 4-hour time frame. So that would be my uptrend lines. I don't really need to go back in the past and look at lower lows over here, highs, because right now those are our valid trend lines. So do we have any upper trend lines? We do not. Okay, we don't have anything. If we go to a daily time frame, we still don't have anything. So I don't actually have a downtrend line to draw. We've been making all-time highs in gold. So let's go back to our 4 hours. So what can I do up here? Well, again, I don't have a downtrend line, but I could see highs. We had bang. There's 3 right there, and we hit it again over here. So as we zoom in on this, what I can see is, again, we've got 4 times it was up around this level. And up here, we actually got up over 2,500. So that 2,500 is a strong level, okay? That is really an all-time high area for gold. And you can see where it's respected that 2,500 area. So we know that it's going to take a lot for it to push up. And I could see that if you look at the chart overall, yes, it's been bullish. But here since over here was April, about the April 14th, about mid-April, it reached up here around 2,500. It was 2,513 around there and then pushed down. And then we've been bouncing in between those areas. So we have a strong resistance area up here about 2,500, which it's breached a couple times, and a strong area down here, which is around 2,350. Okay, is this low here. So I'm more interested in those lows and those highs. Those are price points that as you get the bullish side of the market and the bearish side of the market trading, they're going to say enough's enough. You know, you get a move up to 2,500 and it's like, hey, enough's enough. Bearish side of the market starts losing out. The bullish side of the market kicks in. The bearish side of the market starts taking profits at that price point. Okay, and we're talking about the market makers, the big guys, you know, the hedge funds, the real large ones, and the major banks and countries, and you know, those that actually move the market. So you know, that price point of 2,500 is really strong, and we've actually breached that a little bit. So we're going to look at that individually as far as 2,500 versus 2,514 or 2,530. Okay, and then down here, you know, this point was around 2,356. You know, this point, you know, 2,352. And then this point over here, 2,353. So those areas, that area right there is very, very strong. So we're looking at 2,300, 2,350, you know, would be a good price for a zone. I like using a wick high or low, you know, a wick start and a low for a support zone. And then for a resistance zone up here, I like the same thing. I'm looking for a body to a wick high. Now, I don't care what you call these. I don't care if you call them, you know, a high and a low. If you call them, you know, support, resistance. If you call them a supply and demand zone, it's the same thing. It doesn't matter. Terms have changed over the years. As I've seen, when I started, it was support and resistance levels, and then I got into drawing zones, and then now you've got liquidity, you've got, you know, supply and demand zones. But the supply and demand zones are basically the same thing, support and resistance areas. So that's what we're looking for. So I'm going to go in to these individual areas and look for wicks. Now, I see a huge wick back here. And as I see, right here is around 2494. Okay, around that 2500 again on up to 2517. But then I see a couple areas above over here. So my immediate target is going to be in here. That's the highest we've hit right now. And then we also have, you can see, you can have a smaller zone right here where that wick is. That's a turning point in the market, again, on a 4-hour. So my ultimate zone, and I'm going to grab the rectangle or square drawing tool. I'm going to come in off this high right here, this green candle, and come backward to that wick, the start of that wick. And that's going to be what I consider to be my sell zone or resistance level. That as the instrument, as gold moves up to that, I'm going to look to short it. Now, yes, it could breach that zone a little bit and go up and then, start moving down. And that's considered a liquidity grab by the market makers. When it goes up briefly above that zone, basically it knows there's a bunch of sell orders up here to short when it gets up there. And then what happens is, in order for a market maker to actually get their trades on, there has to be orders in the opposite direction. So they create that move by taking out these orders. And if you pull back in, if we actually go back in and look at the last high here, and let me just draw a ray line off that. I like using the ray lines instead of horizontal. I need to get it up to that candle. So if we look at that area here off this high, we could see that that's what it did here. Again, I don't care what you call it. It made a higher high, which is still a bullish signal, but you can call it a liquidity grab. That's what happened. It's the market makers coming in, and they need to take out these orders in order to get their orders on. So basically higher high in there, but that's what we're using as a zone above. And then we'll kind of come in here. We know where price is. It's right here. I need to look for a zone below, which, we see these nice swings. That's going to be a more day trading target, off this high right here, which is where we're at, off this low right here. That's where I come in, and you'll see me draw with the horizontal ray tool and say, these are more my day trading targets. Those aren't my ultimate target. That's not where we're expecting the swings to go. But I will key those in, and then ultimately we'll come in with our zone tool and draw that, and then we'll come in and color that one as our buy zone. Okay, so now we have a good target above us. We have a good target below us on the 4-hour time frame. We also have an uptrend line here, which is drawn from the start of the bullish move to this point right here. That's our second point. And so we could see that as the pair has fallen about halfway, it's fallen about halfway from this high point to this low point here on our uptrend line. Well, if it keeps falling and breaks through this level here, well, then we could see a reason for it to bounce in this area. Now, it could breach the uptrend line. If it breaches the uptrend line, I'm not going to think long-term short until it comes back up to test that trend line and then ultimately goes back through this zone. Okay. So what I would want to see for that is more something like this. If it breaks through this zone right here, this line, I would actually look for it to come down here and hit this level and then bounce up back to test that, maybe bounce down. Ultimately, if it comes down through this trend line and comes down through this support level, just know that if it hits our zone, it's gonna come back up and bounce up and either stop there and then move on, or it's going to come up into this area. So I wouldn't be surprised if it comes up in that area before moving on. Okay. That would be one scenario as we look at what's going on. So it could come down here and bounce off that. So what I like to do, we have a zone above as resistance, zone below as support. We got a couple midlines in there. I would also come in and draw one in here if you like to draw the midlines, and those are areas where it might hang up briefly or you might see a pullback. What then we'll want to do is come in. Now I like to draw a mid zone. My mid zone, same thing. I like to draw it on a 4-hour time frame. Now, this one looks like it's going to be kind of wide as I'm kind of looking at the chart. I don't draw a mid zone off this right here. This was a bullish move up. We had a nice move down. That's basically non-farm payroll. On Friday, we had the move off that. You know, this 4-hour candle here was whipped back and forth. You know, we had a nice non-farm move down, pull back off that. That's where we're at now. So I need to find an area of support resistance to draw a zone. So what we look at a mid zone is basically somewhere around the middle between the upper zone and middle zone, but we'll ultimately have to look at the highs and lows. So as I look at highs and lows and bounces, I see that where we came at non-farm, you know, in a strong bearish move, and then it pulled right back and closed there and then went up. Well, if you look off to the left, and I'll come in with this, I could see that that area is where it was. I mean, it just look at the candles, look at the swings. We could see that where it pulled up here and turned, that area right there where I just drew that line from is where it turned over here. Okay, again, 4-hour time frame. So what I like to do is pull back and let's see, did it on the left of the chart, did that line hold up somewhere else? I could see here. I could also see here. So I know that is a great turning point. Market came down, broke it, pulled back, tested it, and then shot down. Okay. After non-farm, pulled down, turned, pulled back up. So I want to use that as a level. So that's going to be considered my mid-level. You can keep that as a, you know, just a line if you want, or you can come in and draw a zone off that. Now, when I draw zones, I like to use wicks on the 4-hour time frame. Why? Because a wick is a time during the 4-hour time frame, as a wick during that it's a time between that 4-hour time frame open and close that the market was fighting over position, price position. Basically, bears and bulls. You know, we saw a nice swing up here and a pullback, and then it closed here. So a nice fight between the bearish side of the market, the bullish side. Right after it, this 4-hour candle pulled back up and tested it. So I know that's going to be the bottom of my zone because we also had it back here. Okay, we had a push back and close under. Next candle started here. We had a nice push up, but then the bullish side and then the bearish side took over and pulled down and it closed below. So I see that this high is about the same price point as this high. So what I want to do is you could pull this back, put that on there, and you can see it's actually a little bit above that. But I want to include this high here. So what I'm going to do is I'm actually going to take my zone tool and start it right here at the top of this candle and go to the top of this zone. And that's where we're at right now. And that's what we're going to call our mid zone. Okay, so there's our mid zone. It's off a 4-hour high. You don't have to label them if you don't want. But again, we're including the top of this candle wick. And then we went to basically candle bodies that's in here, candle bodies that's in here. That's going to be my mid zone. So right now we're above that. We go down to a 60-minute time frame and we start there. Right now we're above it. So we would think it's a bullish side of the market. We're dropping down to a 15-minute time frame. We could see that after non-farm, we had a push up. We had a higher low formed here, even higher low formed here, and now we're forming the higher high. So what I would look for in the start of the market is, again, we're down on a 3 or 5 minute time frame. I would look for it to pull back to that area before going long. So I hope you enjoyed the video. Have safe trading next week.